Hello, traders. Welcome to Joy of the Trade. Today, I want to talk to you about the question on everybody's mind. Should I BTFT? Should I buy the effing dip? The answer varies greatly on depending on what you're trying to do here. What's your timeline? Are you a swing trader? Are you going to hold something for 2 weeks? You're going to hold it for a couple of months? Are you an investor? Are you looking to buy good growth stocks in the Nasdaq for the long term? You have to answer that for yourself. I can't answer that for you, but it's a very important thing to know. Regardless, I'm going to show you where the Nasdaq's been, where it's gone, where it might go, and maybe that'll give you a better idea if you should BTFD. Let me share some screens that I'm looking at with you first. All right, so let's look at this 1 year chart. So we're going to look at 1 year of the Nasdaq. Corona broke out in March of last year. Everything went absolutely bananas. And then we made a recent high here in February, which we've so violently pulled back off of. And that's a 103% move, okay, from the low to the recent high. We've done about a 7%, 6.5% pullback off the recent high as it stands where we are now. You're probably asking yourself, after a 100% move, is a 6% pullback the dip to buy? The answer is no, probably not. So let's look at why I say that. This is called the Fibonacci retracement here. And so this is a professional tool that guys look at to see what percentage of a return, what level it'll be on certain percentages of the returns. And there's a couple of big ones that I want you guys to really look at. This 38.2% retracement and then the 61.8% retracement. They seem like bizarre numbers. 50 makes sense, but these numbers are crucial. It's probably why they're highlighted in green. So the first real significant number that we might test that would be a good spot to put in deploy some capital for a longer term investment in some of these in the NASDAQ stocks would be 11,200, which is about a 15% move from where we're at now, 15% lower. Okay. So NASDAQ still up 2.5% on the year. That would put the NASDAQ down a little bit over 10%, year to date, 12%. That makes kind of sense. That's a nice spot to try to put this on. The next big spot would be 9,600, 9,600.04. Now remember, we bottomed out somewhere around 7,000. So 9,600 here, from where we're at now, we're looking at 400 plus 2. We're looking at, oh wow, that would be a big move. That'd be a 30%er we're looking at from here. So that would be a deep correction. That would be more than a bear market. I think the first place you might want to nibble would be this 38.2%, 11,209. So another thing I want to show you guys is what is in the NASDAQ. Well, this is a very top heavy index. You've got Apple comprising 11%, Microsoft is 9.5%, Amazon is 8.3%, and Tesla's 4.5%. Top four holdings about 25% of this bad boy. That's top heavy. And if you look at the biggest stocks, let's start with the biggest. If you look at Apple, and this is a stock that my friend Roger Scott has pointed out, because he sees big red flags. He's a big student of what institutions are doing. And the 13F filings for Apple were non-existent. This stock used to be a hedge fund hotel. Nobody owns this bad boy anymore. And look at this chart. It's breaking down. It just broke underneath the 100-day moving average. Not a good look. One of the worst actual tech stock charts that you can see right now is this Apple stock for the big steady ones. So as long as that's 11% of the index and this thing is sucking wind, you're going to be in a deep doo-doo longer term. And this is not a good looking chart. Another one that I really want to focus on because it's the poster boy of the high flyers is Tesla. And if you see Tesla, which has not broken the 100-day moving average, but has broken the 50, this is a chart that if it breaks that 600 level, that 620 for the 100-day moving average could come back here to 450 lickety split. And that would be a terrible move for the NASDAQ. But there's a lot of air. This stock was around this level last November. It's only been a few months. Think about it. Halloween, you were dressing up like goblins and ghouls thinking Tesla was expensive at $400. And now it just did a pullback to $680. So I hope I enlightened you guys a little bit on some of the possibilities that we could see with pullbacks, how to think about pullbacks, how to think about BTFD. If you're a shorter term trader, yeah, you might want to play a 10% correction. for a couple of weeks for certain, you know, in certain stocks, et cetera. But I'm talking investment today. I'm talking about what the broader market could and should do if it's going to really retrace. So if you guys like this video, like it on YouTube and subscribe to Wealth Press. Subscribe. We've got tons of awesome videos like this, okay? So subscribe today. Like it if you liked it. If you didn't like it, well, you know, probably a lot of stuff you don't like. So LFG, guys. I'll be back next week to talk to you guys again.